A very well-known pharmaceutical company is AbbVie. You probably know of Botox and maybe Humira. Those are big drugs that this company has produced. And I wanted to do an analysis to see if this is a good investment or if it's not. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies and then sharing that analysis on my YouTube channel. Do me a favor and like my video and subscribe to my channel. I'd like to take you through my process that I use to evaluate a company and then make a decision whether I think AbbVie is a good buy, hold, or sell for my portfolio. Let's get into AbbVie. Abbott Labs spun off a part of their company and created AbbVie a long time ago. And AbbVie has been really successful in developing drugs. They also acquired companies. For example, they acquired the company that had Botox, and that is now one of their big success stories. So overall, it's a very well-run company that produces pharmaceuticals, drugs, therapies, and has been really successful. They pay a really nice dividend, and they have a very high market cap. Over the years, I've developed a process that works for me as I evaluate a company. First, I want to know if I want to be a part owner in this company and if I want to be a part of this industry. Second, is the management team doing a good job and running the company well? Is the balance sheet in good shape and less than 3 times EBITDA? And I want a discount on the stock. That way I could buy in at a discount and see my investment go up in value. Based on the answers to those questions, I buy, hold, or sell. I believe that AbbVie is fairly priced. They really only offer up about a 3% discount on their stock. And what that means is I believe their stock's valued, or I have a value on the stock of $157 per share, but you can buy shares on the market for $152 per share. So pretty close to fair value. I value companies based on cash flows and earnings per share. And looking at cash flows, AbbVie has been a high cash flow producing company. Now, something that's happened recently is Skyrizi is one of their big drugs, and it went off patent, meaning that pharmacies can start filling with generic drugs, which are far less expensive. So that's going to take a big revenue stream out of AbbVie's income statement and take it out of their cash flows. So that's one thing that I'm concerned about. They have great cash flows, but their revenue is beginning to go down. So that's one thing that is a bummer. I'm not showing any growth in cash flows, and I'm just using what is my best estimate for cash flows for this current year, which is nearly $22 billion per year. Now, what I'm going to do is I'm not going to grow those cash flows. I'm just going to keep them flat and then have a nice conservative 2% growth in the future. Their terminal value, which means all cash flows beyond year 4, amount to $320 billion. I'm going to have a discount rate of 9% on AbbVie. Their balance sheet, not too good. It probably has a B minus or a C plus. They produce a lot of EBITDA, but their EBITDA is down. As mentioned, they have a loss of revenue. Their expenses are a little bit high. So their debt to EBITDA is actually 3.65. So that is not good. It's not a passing grade for a balance sheet that I like to see, which is debt to EBITDA of 3 or less. Now, based on that, I'm going to discount at 9%, which is a little higher of a discount rate that I would use on a company of good quality. And I'm going to take the net present value of cash flows, which is $279 billion. And I'm going to add the cash on the balance sheet and take away the debt. They have a fair amount of debt, which is a little concerning, $59 billion. And it gives me an equity value of $229 billion. But the market cap of the company is $268 billion. So they're actually trading above what I think their cash flows are valued at. So it's being sold at a premium if you use the cash flow method to value AbbVie. Their earnings per share are real solid. 11 is what is expected this year and next year. And I'm going to use a PE of 24. That's a very good PE. It's a very well-run company. It has a lot of credibility on Wall Street. So I'm going to use those figures. It gives it a real attractive earnings per share value of $214 per share for each share if we value it based on its earnings per share and a PE ratio of 24. So that gives the stock, based on the earnings per share value method, a discount of an upside of 40%, meaning you can buy shares at $152 per share and they can go up to $214 per share if you look at the earnings per share value method. I combine the two and I put more weight in the free cash flow method. And I get to a 3% discount on the stock, which means it's fairly priced. One more point to reference, the return on invested capital is only 8%. So that's a percentage that's not really good. It's okay, but if you consider you can buy into AbbVie's bonds or bonds in their industry and probably make close to 8% on a bond. And a bond comes with very low risk, as opposed to AbbVie. If they don't grow their revenues, this stock price can really go down. So I would rather see a return on invested capital of 15%, and this falls way short of that factor. Looking at where the stock has traded over the last 5 years, it really had a nice run up over from years 2019 through 2022. But since then, really, it's gone sideways, and it's had some really low points as well. And right now, as mentioned, it's close to fairly priced. So there's not a lot of discount available. And as mentioned, there's just too many question marks out there. They can't grow their revenue. If that persists, if that continues, you're going to see a fall in revenue, a fall in cash flows. I think their PE is going to be falling as well if they can't show that they can grow. Year to date, they're down almost 6%, and they pay a 3.88% dividend. So let me take AbbVie through my scorecard. Do I want to be a part owner in this company? Do I like the industry? Yes. I like pharmaceutical companies. I think that they have a lot of desirable things, like they create these drugs that help people, but they get these patents that are really valuable, and they create really good cash flows and pay good dividends. This company is well run. I would like to have seen them really get ahead of their expiring patents and develop more drugs, maybe acquire another company. But overall, I give them a passing grade. The balance sheet doesn't get a passing grade. It's above 3 times EBITDA, which is a concern, too much debt, and there's no real discount offered on the stock. So I have a sell on AbbVie. I think there's question marks. It could really reset the value of AbbVie downward. They could really lose value, and this stock price could be sitting at half of its current stock price in the next 2 to 3 years. I think that's too much risk. So I'm going to be selling my shares of AbbVie. You know, AbbVie could be kind of following the same script as Disney. Disney's such a great company, but their stock price has fallen so much. And that's because they haven't been able to grow. They haven't been able to really replace some businesses that have been failing. And AbbVie hasn't been able to replace that big drug that went off patent. So their revenues are beginning to drop. So if they don't get their business to grow, they're going to be, their stock price is going to be going down. So rather than sticking around to see that play out, I'm going to get out of this stock and hold my capital. I own other pharmaceutical stocks, so those will give me exposure to the healthcare sector. And I will be an investor in AbbVie if they start growing their company, or if the stock price falls to a level where I feel like the proposition that AbbVie stock provides is attractive enough to reinvest. So thanks for watching my video. Do me a big favor and like my video and subscribe to my channel. Good luck investing in 2023.